Hi everyone, welcome back to Corporate Decoder, the place where we turn boring corporate filings into something you can actually use. Today we're diving into Kontoor Brands' latest quarterly report, and let me tell you, it's got a bit of a same jeans, different day vibe. You'll see why shortly. Before we jump in, if you enjoy getting simple insights from complex corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below for discussions. This report covers the first 3 months of 2025. We're talking about the company that owns Wrangler and Lee jeans. So if you've got a pair in your closet, you're already part of the story. They had a few interesting things happen this quarter, including planning a big purchase and dealing with some global economic craziness. Let's decode what's really going on. First, remember that their year doesn't end on December 31, but the Saturday closest to it, so all the dates here are a little weird. Also, it's important to note that this year, 2025, is a 53-week year. That extra week might make some numbers look a little different. It's something to keep in mind. Alright, let's talk about the general economic weather. They mention elevated interest rates, meaning it costs more to borrow money. There's also moderating inflation, which means prices are still going up, but not as fast. Throw in some fluctuating foreign currency exchange rates. That means the dollar's value compared to other currencies keeps changing, and inconsistent consumer demand, so it's hard to predict what people will buy. Finally, it seems retailers are being careful with their inventory. All of this impacts not just them, but everyone, so it's good to know. Tariffs are basically taxes on stuff coming into the US. The US government made changes that increased these taxes, and other countries did the same in return. This is mentioned as a problem because it makes things unpredictable and hurts consumer spending. Here's the big news. Kontoor Brands wants to buy Helly Hansen, a brand known for outdoor and work clothes. The deal is worth about 900 million das. That's a lot of denim money. It's important to remember that this is just a snapshot of the first 3 months and not a complete financial picture. There are a few new accounting rules coming soon, and Kontoor Brands is trying to figure out what they mean. This stuff is mostly for the accountants to worry about. Diving back into that Helly Hansen purchase, it's expected to close sometime in the second quarter of 2025. So pretty soon. They're borrowing money and using cash. They already have to pay for it. Alright, let's get to the real meat of the matter, the financials. Think of these numbers as the company's vital signs. In the first 3 months of 2025, Wrangler made about $407 arguably insignificant. The total company made about $622 million. Important to note is that this is slightly less than the same time last year. Now let's see what geographic regions do best. The US is the biggest market by far with about $493 million. The international segment brings the rest. Accounts receivable, contract assets, contract liabilities, and other similar line items are mostly for accountants. If numbers here change by a large amount, it might mean that a company is having trouble getting paid, but nothing seems out of the ordinary here. They organize the business into 2 main areas, Wrangler and Lee. They also have an other section that doesn't quite meet the requirements to be reported on. Here we see more financial data. The trend continues with Wrangler outperforming Lee. Wrangler made $420 million in revenue, with 86.8 million not only makes more, but keeps more. Important is that corporate expenses took a pretty huge jump. That's not great, and so Wrangler not only makes more, but keeps more core. Important élégamment only makes more, but keeps more for important as that corporate expenses took a pretty huge jump. That's not great. Accounts receivable is money owed to them by customers. Basically, they're unpaid IOUs. This section talks about how they estimate what they won't collect, which seems normal. Here we see their calculation of bad debt, not particularly interesting. They use something called supply chain finance to sell their accounts receivable as well as other financial instruments. Basically, it's a way to get the money that's owed to them now so they can do things with it. Inventory is, well, their inventory. Finished products make the most, which is good to see. These numbers seem normal as well. Here is another section about their external supply chain. The numbers seem pretty normal, nothing to be alarmed about. Here we get the details about how much debt they have. Their revolving credit facility is sitting at $0 for all of the periods shown, which is great. The main numbers to focus on are $336 million for the 4.125%, notes due 2029. Cathay ended up paying $5 million back in Q1 for the term loan A. Good to see end up paying $5 million back in Q1 for the term loan A. Good to see. Fair value is basically what something is worth in the open market. In most cases, these numbers are the same as the original numbers, but this section is important for derivatives. Here are the fair value numbers. They seem normal to me. The investment securities held in the deferred compensation plans are used as an economic hedge. This is where they talk about how they protect themselves from currency swings. It's important because they operate all over the world. Basically, in a nutshell, derivatives are contracts that protect them if the dollar becomes too valuable and foreign currencies becomes less valuable, or the inverse. This is done using swaps so that they can keep costs similar to what they estimated. This section, like a lot of the accounting sections, is mostly to keep the accountants happy. This is the section about taxes. They pay about 20-25% effective, which is about normal for US companies. Earnings per share, EPS, is how much money the company made for each share of stock. Basic EPS was 77 cents and diluted was 76 cents. These are their leasing payments for stores, equipment, and the like. It's an expense, but nothing seems out of the ordinary. They have restructuring costs, mostly related to layoffs and changes in manufacturing. So that also might affect your area. They expect to pay out most of that $3 million restructuring accrual in the next 12 months. After the quarter ended, they granted more stock to employees and directors, refinanced their debt, declared a dividend, and expect the Helly Hansen deal to close soon. So after running through all that, what's the verdict? Well, Kontoor Brands seems to be navigating a tricky market, but their numbers paint a mixed picture. Wrangler is carrying the team while Lee is struggling a bit. The Helly Hansen purchase is a big bet, but it also adds some risk, and that corporate expense number is concerning. From the risk factor side, a big one is reliance on major customers, which means if Walmart sneezes, Kontoor gets a cold. Supply chain and tariff issues also add to the uncertainty. Overall, I'd say Kontoor Brands is at a crossroads. The Helly Hansen deal could be a game changer if they can pull it off. Alright, that's our breakdown of Kontoor Brands' latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching, see you next time.